Can you repeat the last name of? Oh, his last name is Lindor. Yeah, Stevenson Lindor. Um, on the weekends, I definitely suggest you guys to be studying. Go to the academy. Go to some previous recorded videos. Go into your demos. Look at some things. Okay? Don't just wait until it's time to get in live for you to open up your trading accounts and be able to look at the material. You're not going to succeed that way. Okay? Studying is when you ain't in the market. And be honest with you, and I don't know if BI is still on here, but the more you look at the actual platform and the charts when you're not trading, the better you'll be when you are trading. That's why BI always puts charts in the chat, because he's a beast now. Okay, because he marked up and he looks at his markups more than he does into the market. Okay, so the more you look at it and play around with it, the better you guys would be. So sorry for my little spill, but I just had to let y'all know what kind of helped me. So right now we're going to get into some of the candles and indicators and the doji candles and different things that will definitely help you guys be able to profit. Alrighty. Okay. Alrighty. All right, the first candle. Now, as we talked about last week, we know there's different candles for different things, and they mean different things, okay? So we already knew about the regular engulf candle, as we talked about last week, and I definitely forgot to put that into the chat last week's PowerPoint, but I will tonight for sure. And so the engulfing candle, just like this long green thing is, it's an engulfing candle, right? So that just means that that whole time frame in that area, the market had a lot of buyers in this area for green, right? In that time frame on that red one, the market had a lot of sellers there for red. Okay. But for HFX, those small little wick looking candles you see, they mean something. And if you can master how they look when you spot them, it can really help you out to tell you when or you need to get into trades and where you need to get out of them. Okay. Now, what I'm going over tonight is basically what we're going to be looking at if we're not in the market or in trades with the educators. Now, this is for when you starting to look at stuff on your own. You like, look, I think I can look at some of this stuff. Shanika said, go back, play in my demo, look at these patterns. I think I can start looking at this thing. Okay. So this dragonfly doji right here, the circle right there. It follows a downtrend and is a good indication of a reversal to the upside. Okay. You're waiting for the candle following the dragon to close above the high of the dragonfly, which is the second candle. Okay. We will be waiting for this second one to close. If it closed above the original dragonfly doji, which it did, it is an indication to confirm that the bearish momentum that was going down is over, and you should be looking for calls or buys for your trades. Okay. Does everybody kind of understand the dragonfly doji and what it means? If you want to take a picture of these screens, please do. But I will drop it in the chat and the information as well. Okay. Does everybody understand the dragonfly doji, or do you want me to repeat it again?
No, that was good.
Everybody else good? Y'all unmute, please, so I can know.
Yeah, I'm good.
Yeah.
Okay.
Yeah, we good.
Yes.
Okay. All right.
Yes.
Wait one more time for me. This lower.
Okay, well that's fine. Well, just just keep watching, and it'll start clicking to you. It'll start clicking, But if you are 1 day or 2 day in, I definitely don't expect you to just be like, I know everything, Shanika. But at least you started to look at it. And when you start looking at your charts yourself, then you all know what you're looking at. Okay. All right. This next one is the shooting star doji. Right. And one thing about the foreign exchange market is so many different names for you to understand. So it's always best to write them down if they don't have a recording for you, or to look at the information that's into the Discord apps. Okay. Now you might find some things like this on the Academy, but it might be in layman's term, and you might not really understand what they're saying. So I just try to put this together so that y'all can kind of understand it as best as possible, without kind of sounding too technical. Um, and so that's the shooting star doji. And these will be candles and dojis that y'all see every day. And y'all might not even know what that meant. But if you started to look at them and you're trading on your own, and you see that shooting star doji, you're like, wait, that looked like one of the candles Shanika was saying on that session. Let me go back to my notes. And you see this shooting star one, and then you see that candle right afterwards, because the shooting star follows an uptrend and is an indication of the reversal to the downside. Okay, you'll be waiting for the next candle to close below the shooting star to confirm that the previous trend is over for a put or a sell, right? So say if we are here and you like, oh snap, I see the shooting star. Let me wait for this next candle here to close. Well, then after it closed, you start to see, uh-oh, I'm on the third candle. It is right around this area. Should I get in here at the top? It is down here, but I don't know yet. Let me wait. So somebody could have really got in right there and put a 1 minute or 3 minute put in, and you would have cleared it. Okay. But it says what? You're waiting for the candle to close below. Right? Doesn't it say that? Waiting for the candle to close below is what it says. So this one right here would have been risky, even though it would have cleared. This candle, you started to see, oh, wait, but it ain't closing below. This one went up, so let me wait. Well, then this one actually closes below. Right here. This third one does. Right? Then you get in here, and you probably could have put a 1 minute or a 3 minute or whatever. Be honest with you, you could have even would have did a 15 minute. You would have just been putting all the way down. Put. But once it closed, you realize, oh snap, I'm clearing my entries. Like it's not even close. That's the goal, for you to get an entry so far down that it ain't even close. Like you don't even have to sit there with your heart beating fast. Like, oh God, I don't know if this gonna close or not. I've got pocket option. I can't roll over. No, we need entries that it's shot so far down. Your entry, you can't even see it no more. Those are great entries. Okay. And so when you start seeing shooting stars and different other dojis, and you look back and you look at your notes and you see, oh snap. Yep, this one closed under that doji right there. I'm going in for a put. Well, in this illustration, you would have cleared easily. Okay. Everybody cool on the shooting star?
Yes.
Cool.
All right.
Cool.
Yeah, I'm good.
Okay.
Yes.
Yep.
Yeah.
Yep. I'm
We
good.
got the hammer. We got the hammer next. Okay. And the hammer says it usually follows a downtrend and is an indication of a reversal upward movement coming up. And when this candle is closed above the hammer, look for a call or a buy. Now, this actual illustration is a great one to look at. Because what? The next candle is here above the hammer. It closed. What are we doing? We're getting in for a call, and we would have what? Cleared all of those calls. Okay? So this is the hammer. All right. The gravestone doji. They got so much different names and stuff. So the gravestone doji is usually following an uptrend and is an indication of a reversal to the downside. Of course, as we said on the rest of them, you're waiting for the next candle to close below the doji. Okay? It's always waiting for the next candle to close. You don't go right in on that next candle after the doji. That's risky and you might lose if you don't have a longer time frame on that trade. So we're waiting for the next candle to close. And then you'll be looking for your opportunities to sell for this gravestone. Okay. And I know you're saying to yourself, like, but that's all the time we see in certain ones. Well, you should be doing exactly what these illustrations say all the time if you see them. And wait for the next candles. And it might be the candle after that, but you need to wait for the candles to close above or below it. But this one is below for the gravestone. You're waiting for it to close. You see that it closed, okay? And then you say, oh, this was the gravestone doji, okay? This was the next candle. It did close right here below it. So I could go in here and I would probably put it in for a 5 or a 15 minute just to make sure I clear it. Or I could have waited and went in here and did 1 minute ones and just beat it down the whole way down. It just depends on what time frame you're looking on your chart. Okay. That depends on how much minutes that you should be clearing. But one little tip for a pocket option, when you are looking at the trade, the market yourself, and you are able to look at the strategy, or even if you're just looking at the market yourself without a strategy. Because I actually had a few people that's been looking at the market without a strategy, and just seeing some of the things that we talked about last week. And so I would say if you really want to make sure you close a trade, if you're looking at the market yourself and pocket option, if you don't know what you're doing, I would put a little more time on your trade than 1 minute. Okay. I would probably do 5 minutes or even 15, to be honest. Because if I did a 15-minute put on this candle right here, I was clearing with ease. I wouldn't be stressed. I wouldn't be trying to figure out, oh my God, I don't know. It's about to shoot up or down. I don't know. Oh, I'm only got 30 seconds left. It's close to the no. With certain doji candle reversal patterns, you're gonna clear with ease. That's when you can really go to the kitchen and fix you a sandwich and come back and your trade's still in profit. Okay. When you understand these reversal candles, it's so much easier. It's so much better. And you can go into the market a lot when you see it. Okay. And mind you, some of these reversal patterns and these dojis may be in a period of consolidation. Well, that would actually make sense then. Because if we're saying that you ain't supposed to trade in consolidation because it's sideways, if you see in the doggone consolidation reversal candle coming, well, what indication is that letting you know? That consolidation is what? Almost over. And depending on what reversal doji you see, you already know what time it is. Okay. And so a lot of the reversal candles and the dojis, they really coincide with consolidation markets. Because once you see them, you already know what time it is. So you don't really have to guess. Like if this right here was a period of consolidation right here, right? If that whole thing was consolidating, And then I see this previous high, right? Because this little wick area is the previous high of this pattern. Okay. And I see that and I said, okay, well, it wicked down. It gave me a gravestone. Yeah, we're still in consolidation, but I know that gravestone means a reversal to what? The downside. So I'm getting happy, right? I know my consolidation period is about to be over. I'm watching this pair like a hawk. I'm gonna put it to my favorites. I might, check it out every blue moon to see what's going on with it. So, say if I start watching and I see, oh man, the next candle came as a doji. Oh, this one is closed below. Well, I'm getting in for a put. And like I said, if you got pocket option, 15-minute put because you will clear without being stressed out. And if you have any other broker, you could do a 5-minute or 3-minute, but if it's still close to your entry, well, it's time to roll over once or twice. We never really roll over more than 2 times because, first of all, if you don't clear and all them rollovers, it's going to take more money from you. And if a trade is really going to go the way that they're expecting it to go, after, depending on how long that time frame is, after that second rollover, it should go that way. Now, sometimes it does take a longer period of time for it to get there, but you don't want to just be rolling over every 3 minutes. And next thing you know, you don't look and you 10 times rolled over. No. Okay. So that's just the max that we suggest. 2 times rollover max. Okay. So everybody good on the gravestone?
Yep.
Yes.
Yes, ma'am.
All right, let's go.
Yes.
Uh-oh.
Yeah, I'm good.
Yes,
All
ma'am.
right. So those were most of the reversal candles that you will see. Now, mind you, if you have the Candlestick Bible, which I would suggest, write that down, everybody get Candlestick Bible. You could get it on your Apple Play or whatever, or you could just go order it or whatever. Candlestick Bible. Please write that down. That's really important for you to get that book because it's a lot of different other candles and dojis. But those are just the main ones that you would definitely need for HFX. And to be honest, if I got any regular Forex heads on here, you see those reversal candles, that's a great time for you to buy and sell in regular Forex too. Now, mind you, it may be shorter moves, okay? But you still can profit from knowing regular Forex and HFX. All right. So now we're going to go to support and resistance. All right. We talked about this a little bit last week. We talked about it a little bit last week. And so now we're going to talk about it a little bit more because the market, this is one of the most important things for you to learn, support and resistance. If you learn support and resistance, you really can do some damage by yourself into the market, even if you don't have an educator in front of you. Okay. And so support occurs when the falling prices stop and it changes directions and it begins to rise. Okay. Support is often viewed as the floor, which right here says support. This is the floor. Before all of this move happened, this was the floor, meaning the bottom of this currency pair, of the price. Okay. Or it's holding prices, and the resistance is the price leveling where rise prices stop, change directions, and begin to fall. Okay. And so we were here at the support at one point in time. And then the market went back up. Well, now this is the new resistance level because it went back up. And the resistance is kind of viewed at or referred to as the ceiling. Okay. And so we know whatever comes up, it has to come down. When it comes down, boom, it hits the support or the floor. And either it's going to break through the support of the floor and go to a new level, or it's what? Going to bounce off because it don't want to go nowhere. I don't want to go nowhere. I don't want to go down. I don't want to go down. So when you see an area like here that has a support and you see it start to bounce off, it was not ready. Okay. It wasn't ready. So you couldn't make it be ready. You ain't going to force it. You start seeing this sideways movement on these wicks coming down here to the support area, and it's letting you know clearly, it's telling you, the market tells you. The market tells you what it wants to do. You just have to be patient enough to listen and look at it and see, oh, okay, you telling me you ain't ready? Okay, I got you. We're good. Okay, so now I'm going to watch you then. Because you already done said you ain't ready. So if you ain't ready, then what? What's coming down and it's trying to break it, but it didn't, is now what? The resistance area for the ceiling. And it's the same thing with the resistance, right? If it's not what? Breaking through this ceiling to go up, then what is it going to do eventually? Somebody let me know.
Go back down.
Go back down.
Go down.
Correct. Correct. Okay. Now, we talked last week about those wicks, right? Those little sticks that y'all see, and you like, why do I see a lot of sticks sometime? And I don't understand what that means. That meant that it went back up here to a level of the ceiling of resistance, and it was not ready. This is what people will call a zone. Okay. In this zone, it was not ready. And so we know if it's not ready to go to the next zone, it's going to go back to the previous zone because it got to go somewhere. Okay. Either it's going up or either it's going down or what? Sideways. But it wasn't ready here in the support level. It was shot back up. This is the new level of resistance. It clearly, all of these little wicks told you, I ain't ready yet either. I'm going to still play with you some. Right? I'm going to play with your feelings some. I ain't ready. And you ain't going to make me be ready. The market was stubborn right here. You ain't going to make me be ready. I ain't. So I'm going to play with you. And so in HFX, you would say, oh, you think you're going to play with me? No, you ain't. I got you. So you see all this going on up in here. I'm going to take some puts. I'm just being honest. Because if this is the new level of resistance, it clearly told me all these time frames of candles came and it was not breaking this ceiling, you could go ahead and take a put. Okay. Oh, I see somebody in the chat. Let me see. Oh, okay. So BI said he just dropped the candlestick trading book in the chat and the Discord, guys. Thank you, BI, for that. That really took his trading game to another level. And so it's definitely a book that everybody needs to look at because when you know what the candles are telling you, you know when and when to get out of trades. Okay. And so if we took some puts right here, and this would probably be 1 to 3 minute puts depending on your broker. But like I said, if you got pocket option, you're going to need to take a little longer because you want to make sure that you clear your trades. Okay. So I see this new area of resistance. It's not breaking it. I'm going down. I'm taking a few puts here. Okay. And then I'll stop because I started to see this wick here. Right. And then I see it's a little pullback. Not a lot, but it's a little bit of pullback here because it went up some. So I'm going to wait. Because I don't see a full candle right here. I just see a whole straight stick. Okay. So even if it went up, it went back down. So I would wait. Anytime you see a whole straight stick, no candle color at all, you need to wait. Because either the market is wanting to continue on the path that it was going or on the trend that it was going, or there might have been news. It might have been a world issue. You just don't know. But when you looking at your charts and you start seeing this full straight wick and no candle piece in it, just wait for a second. Okay. And so once I would have waited, I would have saw, oh, okay, yeah, it's still trying to go in the same direction. It was just doing a little small little impulsive pullback right there. And it started to go back down again. And then the same thing happens. Okay. It went down. This would have been the last area of support. And then what? It still wasn't ready to drop. It went back up again. It did the same thing here. And it went back up. This is the next area of resistance. And it just continues and it continues. But the thing is, you knowing about support and resistance will really allow you to get in and out of the market with the bag. And you don't even have to look at an educator session. You can just look at it yourself and see clearly all this movement up here is not breaking this ceiling. Even if you don't understand, resistance and support, call it the ceiling and the floor. Okay, ceiling and the floor, right? We just gonna scratch out support and resistance, the ceiling and the floor. If it ain't trying to break the ceiling, you see all that going on, it ain't trying to break this ceiling, you already know it's coming down. And depending upon what's going down in the middle of the house, now it could be a lot of foolishness going on in between that house. All kind of stuff going on in the house. You see some sideways movement in the middle of the house. You see all kind of stuff going on. But if you can catch it at the top of the resistance, you know your trade is going to clear because it's not breaking it. So what must go up? If it's not going to break it, it comes down. Correct. Okay. Does everybody understand a little bit better about support and resistance, better known as the ceiling and the floor?
So just out of curiosity, the lines that you have right there for your resistance and support, I see that off to the left where it's actually on its way down, the line right there. You chose that because of what and why you created the zone at the top?
So right here, you're talking about the last one that says resistance?
No, the one that's up at the very top, the zone is at the top. And then I can see the candles are coming down. And just out of curiosity, I joined in late, so I missed some of what you were saying prior to this, but was wondering what made you draw your ceiling at that point?
At the top right here, at the first one that says resistance level?
Correct.
Okay. So, and for everyone else that joining a little bit later, this is a level of resistance because this is the area that it went to previously. Mind you, this is at the original top, right? But it went down to that area of support. And because it went down to the area of support, once it did the pull back up, this is my new area of resistance because this was the highest at first. This did not go higher than this. So this is my next area. You understand what I just said?
Yeah, because I was looking at the candles were coming down as you can see that it was coming down to go to the floor. And then I see the line coming across to create a new resistance at the top. And I guess my question was, maybe it didn't come out quite correctly, was what made you create that resistance at the top? And then at some point, it would have to go down to the bottom to create a support. So I guess you gave it some time to see where it would make the correction to start going back up. And that's what gave you the support, your line for support. Correct.
You are absolutely correct. You answered your own questions.
Well, no, I mean, I'm just observing and seeing if I'm getting it right, and just wondering.
You're absolutely correct. You in this illustration, this is a over a period of time. It's just not, it could be 5 minutes, it could be the 15 minute, it could be the 30 minute. But I put it there because this area did not go higher than its original top. So I can't put this level as the top resistance because this is the first part of it.
Right. The legs that were coming down. Right.
Right. Now, when it did the little, excuse me, when it did the little correction and pullback, it went up here. Well, these wicks in this area told me that it was not ready to go back where it was. So now that I saw that it's not ready to go back here and it started to come down, when I get to this area, this is my previous area of resistance because this is where it previously went high at. Okay.
Okay.
You got me?
No, I got you.
Okay, cool. Anybody else got any questions about support and resistance? It's definitely imperative. I really can't stress it enough. Imperative that y'all understand support and resistance because you
I
could
have a
be.
question.
Okay, go ahead.
Yes, about the when you were pointing at the resistance and you said the wicks were telling you that it wasn't ready to go above the resistance line. What exactly does the wick represent? Like it's trying to push up, but then it get they sell off and then it makes it go down. That's what you're
Correct.
saying?
Correct. And one thing about it, guys, I want to make sure y'all understand this. Y'all don't have to say it specifically like the scholar said. As long as you understand it, we good to go. Okay. So as he just said, that's exactly what happened. It did this pull, it went down. Boom, we had the support. Well, it gave you a little area where it tried to pull back to see. The buyer said, we ain't ready to go all the way down yet. Let's see if we can push this baby back up. So it went up, right? In this area. So you start seeing the wicks. It's exhausting yourself. It's like, man, I'm trying to run this marathon. I'm trying to break through, but I'm tired. I'm exhausted. The buyers was like, look, it ain't enough of us. Y'all trying to go up, back up there. It ain't enough of us. Like, we just got to just tap out. We tired. Okay? And so after that, after a while, you just get gassed out. You're like, look, ain't enough buyers, bro. Let's just go ahead and just let the sellers win. And so the sellers won. They said, nah, we got this. Let's push this thing on down where we wanted to go. And so that's what happened. It started wicking out, it gassing out. Boom. The sellers won at that time. So it started coming back down. Well,
So
then we in a
why,
period. I'm sorry, go ahead.
Is that why you're starting to see the little doji candles at the bottom or the little ones that's in the middle?
Correct. So now, as everybody see right here, this is a little area of consolidation in this sideways right here. So now we got a tug of war. We got a tug of war with the buyers and sellers. They like, oh yeah, we're going up. Yeah, we got enough. Nah, bro. We ain't got enough what we thought. Oh, we going up, man, y'all. Where y'all at? I thought y'all had some strong momentum. No. Man, let's just go ahead and let the sellers win because we ain't got enough buyers like we thought we did. We ain't had the manpower we really thought we had. And it started to go back down some more. Hopefully y'all understood that little illustration. It just came
so in this other zone down here at the bottom, in that consolidation that you pointed out, would that be a bad time to trade? Because I'm looking at the confusion right there of ups and downs. I see some long candles and some doji candles that's in there, and it looked like it's a bunch of confusion.
It is. You are exactly right. How could you know what to do? So you wouldn't. That's why we say market moves three ways. You buy, you sell high, you buy low, but if it's sideways, you shouldn't be in it. Now, I will tell you, if you're a master trader or advanced trader, you can trade consolidation, but it's still risky. But anybody just coming in new, absolutely not. Absolutely not. And that's why, because it's a period of indecision. You just don't know. And so, listen, one thing about it, if you see two people fighting over somebody and you don't know that person, you ain't really trying to jump in and you like, girl, I ain't gonna do that. Let me stay out of this fight and let them do whatever they're gonna do. And then after they finish, then I'm gonna come in, and do what I need to do. But I'm not getting into their fight. So consolidation, that's all it is. The buyers and sellers fighting with each other. They trying to say, oh, who dominant? Oh, what bank that is? That's Chase Bank? Nah, man, we Wells Fargo. We got this. Oh, what you got? Oh, you got Bank of America and Chase. Dang, let me try to get my boys. Let me try to get Boeing in there with me. Because we need somebody to help us win this fight. The sellers is really taking over in this trade. That's all consolidation is. Big old Fortune 500 and billion-dollar companies going head to head, trying to figure out, oh, y'all ready to move in the market? Nah, we ain't ready. We ain't got enough pull right now. We need to wait. And that's exactly what it is. So you don't get into $2 billion companies fighting over each other. You let them fight. And whoever win, after you see certain doji candles starting to pop up and you see some wicks in areas, whoever win, then you start letting them know, oh, okay, now I get in here. Y'all finish fighting? Oh, okay, now we get in here. We can go ahead in the market and go ahead and make us some money after y'all finish fighting. Right. No one is in control when it's in consolidation. Right. You're absolutely right, B.I. Thank you for that. So if anybody in control, I don't know who to go with. I don't know whose side to take. Right? If it's two siblings, you don't want to take nobody's side if you the other sibling. You like, y'all, I ain't got nothing to do with that. Don't put me in the middle of y'all stuff. Then after they finish fighting, then they be like, yeah, I did agree with you on that. Yeah, you was right. And then that's what we do. That's sellers and buyers. Yeah, you was right. You was right on that. Yeah, I ain't want to say nothing at first. I was gonna let y'all fight, but I saw now. Yeah, you're right. So I'm gonna go ahead with you. I agree with you. And that's what we do as the regular people, right? We don't get involved in those, billion-dollar companies fighting each other back and forth. Mm-mm. So everybody got support and resistance. Sorry for my little antics, y'all. I'm crazy.
It's all good.
Yeah.
You put it in a level that we can understand it.
Definitely.
Okay. Yes, absolutely.
I don't know why I keep on going back there. All right. So hopefully this meeting don't last too long. I'm sorry, y'all. But it's some things I want y'all to get. All right. The break of structure. Okay. It's really important because the last illustration we saw, that area of support was there. It went up, it went down, but then it broke that area of support. And when it does, you see the break of the structure, right? The break of how it looks. Okay. And so in this circle here, this was the last area of support. A circle, right? Then it went up here. It said, nope, we're not ready. Okay. Went down here. And that was a nice old engulfing candle. Okay. As we said last week, the engulfing candle tells you a lot too. That lets you know the sellers were coming in with a whole AK-47. They was coming in strong. They ready to take any and everything that's on the table. They came in strong. And it just whatever little buyer was still trying to be left, they said, nah, this our time right now. Okay. And so that engulf candle, all them sellers said, oh, it's our time. Well, then we say, well, we're going to wait and see if it really breaking it. And this whole trend line right here is the area of support. Because if it would have stayed right here, it would have been in the same area of support. But it didn't stay right here. It broke from right here and it went down. Okay. And so this is what you call a break of the structure. The structure means this whole area. Okay. This whole area is a support. Okay. But this engulfing candle of the sellers coming down let us know, oh, get ready. They done came in heavy. It's time for us to start looking at it now. All right, we let y'all come in heavy. But we trying to get all the stuff that y'all leave behind. So just let us know what y'all really want to do. Okay. And so after this happened, it broke it. This next little candle here broke it. Boom. So that let us know, oh snap, the seller's in control. It's time for us to start putting in some puts. Okay. And so after it broke this area here, this second candle broke it, I would have put a put in for a few minutes. I would have cleared. Okay. And so this area would be now, after this small little pullback area, the market just probably say, oh, let's see if we, little prepaid card, little green dot, probably say, let's see if we got a little pull too. And they like, girl, sit down. Green dot, you ain't got no pull on these big $1 billion companies. And what? It went back down again, Okay. And so it's very important for you to know about the break of structure, because even if this is a support and it goes up, it comes back down here and it breaks this area, that's another indication letting you know that whatever trend that you're in, the sellers in this case are in control. And if it was going up, the buyers in that case, if it was a green engulf candle going up, the buyers is in control as well. Everybody understand the break of the structure?
Got it.
Yes.
Okay.
No doubt.
I recorded this too. I think I did. I hope I did, Lord. And if I didn't record it, I still got the presentation that I'm gonna put into the group chat. All right. The last thing, y'all, and I ain't gonna hold y'all long, but y'all need to know what these indicators is and why you see a lot of them on a lot of people's charts. The stochastic is one of the how do we know if it's not faking this out? Regular structure is broken. If one of the indicators that you will see on a lot of people's chart. And it's because it is the momentum indicator that actually it acts as a support and resistance level following, and it gives you kind of an indication of what is to come for the next trend. And so we see the support and resistance illustration here. And then you see your stochastic doing the what? Same exact thing here. So almost every educator got the stochastic, I think, on theirs. So just say if we are looking at the stochastic alone, and we see that the stochastic is up here at the top. If it's acting as the what? Ceiling and the floor, then what do you guys think y'all should have done at the top here once it hit the top of the ceiling and it didn't move? Because it's not going to move. It's going to go up or down. So at the top right here, somebody tell me what y'all should have been doing.
Put in.
Making a put.
Right. Right. And if you're on regular Forex, that's some sales. Right. Get in. Right. And this is actually really good because you could have got in here. Right. And then you could have sold here, did a small pullback, sell here, small pullback, sell here, sell there, small pullback up, sell there. So this is where people get, in regular Forex, this is where people get a couple of entries. Okay. And then on HFX, if you already see it's at the doggone ceiling on your stochastic. Now, this is just the indicator I'm talking about, but of course, you're going to look at other things as well. But this is the purpose of the stochastic, why you see it on almost every educator's strategy. It's a good indicator. It's really good. Okay. This thing getting on my nerves. All right, the RSI. It's the relative strength index, but we just say RSI. Now, the RSI lets us know when a currency pair is overbought or oversold. Meaning, if it's overbought, then it needs to go down. Pretty much. That's in regular straight talk. And if it's oversold, right, sell at the support level. You're correct, Isaiah. For the stochastic, absolutely right. For the RSI though, it's the same thing. If it's up here, and you already know that this is the area of what? The ceiling, and it's overbought here, right? It's gonna have to what? Come back down. So you could be getting up here for puts. And the same thing once it's oversold here at the what? The floor of the support. And it's going to be what?
Calls.
Going back up. You'll be hitting calls. Correct. So RSI is another one that you will see on almost everybody's strategy. And this is why you see it. So I wanted you guys to see why you see those indicators and what they mean when you are looking at them yourself, when you are looking at them, because you guys can always go to your broker and add these indicators in. That's why I went over them. You can add them into your screen. Most of the brokers have the ones that I'm going to go over. Now, some brokers have more. And I'm going to be real with you. That's another reason why I have pocket option, because pocket option got a lot of indicators that other brokers don't even got. Just saying. That's really good. All right. The next one is the EMAs, which is called the moving averages or the exponential moving average. And let me see. Yeah, okay. See, Alicia says she likes the parabolic dots. Is Chris on this session? Chris, are you on here? So the emails. I'm sorry, somebody had a question.
I'll go hop in, but you have moved on to this one right here. On the RSI, when they have you to put in the line that's in the middle, like the 70 and the 30, if you happen to do like a 50 in the middle, would that be considered your line of resistance? Or say if you're 70 and 30 would be like your
correct. Your support and resistance.
Yeah.
Correct.
I noticed that different educators will have a different line, or they move the lines a little different. So just wondering if if you did just a 50, if it went over to 50, would that be considered oversold or?
Yeah, the top, hold on one second, let's go back to it. So you're talking about the little rigid line?
Right, the little dotted line there. Say there's usually two in the RSI, maybe a 70 or 30 or 25 or 75. And I've had some educators, well, I've watched some that just make that just straight 50-50.
That's probably just because that's the style that they like, you know, to kind of look at the market. But most people just do the regular, I think it's 80-20 or 70-30 or whatever. Because and personally for me, I do 70-30. I don't do 50-50, and it just works better. Everybody can. The one thing about the indicators, you can change them to whatever style or whatever amount that you want to, you know, have it at that works best for you. But most people do the 80-20 or the 70-30. It's rare that you see somebody 50-50, but it has happened though.
Okay. So anything that's going over the 70 would be considered the overbought. And
correct.
Then
and you know it's going to be
30,
going down.
Right. Okay.
And it's going to be going up. That's correct. Yeah. All right. So let's go ahead with the EMAs. And the EMAs, they are moving averages, and some are the exponential moving averages. And so these indicators here, they follow the price of the currency for the amount of days that you set, whether it's 4, whether it's 50, 200, it doesn't matter. It doesn't matter what it is, but they follow price. Hold on one second, guys. All right. So this is the indicator that a lot of people use. because it gives you like a good entry and exit point in the market. Okay, as we see here, depending upon what number that you put your EMAs on, once they cross, they tell you a story as well. Okay, and so here they're crossing here, and that lets you know that depending upon if it was the 4 or the 50, depending on what price, what number they had it on. That this was a clear indication that the market was about to shift from the downside going up to the upside. Now, you put this EMA along with the stochastic, and I'm really giving y'all some sauce for real right now, okay? Because it's the strategy that we got, that this is all of the indicators that we use. That's why I did this. You put the EMAs with the RSI and with the stochastic alone, not even any other ones, not the parabolic dots, not the all other stuff. If you just put those three together and the EMA crossing, the stochastic is at a level of oversold, the RSI is at the top of the ceiling. Some good old entries you can get. Just put that out there. Okay. And so that's the regular moving averages and the EMAs. And that's the reason for them. It's good entry points to get into the market, guys. Okay. And the last one. Let me see. I say facts. We definitely agree. Yeah, he murders the market on those indicators. And to be honest with you, it's a lot of other ones too. But these are the main ones that for a newbie that you really can start to look at and start to see exactly what we're saying when you get off this call. Now, once in the next few weeks, we're going to go over other indicators that we use, like the MACD or the momentum, as Alicia said, the parabolic dots, the volume. And it's about 2 or 3 ones, and balances. We got a lot of other stuff we want to cover in the next few weeks too. And so I'm going to get BI to do the imbalances because he's really good at that. Even though I know it, he's just really good at imbalancing the market. And so we're going to look at that too in the next couple of weeks. But this last one is the 200 EMA. Okay. And this 200 EMA alone lets you know what the overall trend is. Okay. It lets you know what the overall trend is. Even if you have some periods of an impulse that you think something else about to happen. If that 200 EMA is hovering under the trend, then you know you are in an uptrend. You are in an uptrend. BI said in the chat, go back and test it. You can use EMAs as your support and resistance. Yes. Yep. Now, if you see that your 200 EMA is hovering over your trend, over your actual candlesticks, then you are in an overall downtrend, even if you have these small areas of pullbacks. Okay. So as this illustration showed us, the 200 EMA is under it. Okay. And even though it went up here, but it had small pullbacks. But did it break the 200 EMA? No. So even if I'm in this thing and I'm riding it, and I see these small areas of pullback, I'm not stressed because the overall trend is still up. Now, when we start getting really good in this thing, you can trade the pullbacks. You gotta be a little bit better. You gotta be real good at that.
Oh yeah, that's when you a whole sniper out here doing that.
Right. You gotta be real good at that now, because you could be thinking it's a pullback, and if you don't watch where your EMA is and your other indicators that tell you something else, you could be thinking that you're in a quick little pullback, and it's all the way retraced all the way back to where it was. So you gotta be definitely good at that. But once you do, once you do, you could just pretty much assassinate the market.
Now, on this right here, when you say the 200, let's just look at this particular screen. Would this be at a particular time frame, like 5 minutes, 1 minute, 15-minute candle, or would that make a difference in where the 200 would actually be?
Say that one more time. Hold on, Spongy.
The 200 at moving average on different time frames, such as 1 minute, 5 minutes, 15 minutes, 1 hour, would that make the 200 moving average be somewhere different? Or like right now, just using
no,
this
it's still going to give you the overall trend.
Okay.
It's just the time frame is going to be different. Okay. And so once you actually can go to your screen and put EMA or exponential moving average in, and you add 200 to the input, it doesn't matter if it's on the 1 minute, it doesn't matter if it's on the daily. It's going to give you the overall trend, whether it's on the 1 minute or not. It's just going to give you better entry points. Because once you're, and this is another quick little tidbit I'm gonna give y'all. If you got 2 EMAs on there, that's really good, right? Along with your RSI and your stochastic. But if you got all 3 of those EMAs, which is the regular 2, and you got your 200 EMA on there, and you see they cross all 3 of them, it's night. It's night for whatever pair you own, because it's time to assassinate that pair. Okay. Because you're always gonna go down to a lower time frame anyway to be able to enter, be able to know when I need to get in so that I can catch the wave. So your EMA gonna always tell you what trend you're in. It's just gonna give you a better entry point if you're going down a time frame or 2. Okay.
So what would be the other 2 numbers that you would actually put?
Now that depends on the educator. Okay. Because some educators, so BI said he used 9 and 50 and 200. Okay. That's what I use too. But you might have somebody else sessions that you're on. Maybe they're in our group, or maybe they're on the platform. Like my mentor, he used 950. No, he used 450 and 200. And then you might have somebody like Matty Pips. He might use the 50 and the 4 and 200. So, and some people use 4 and 9 and 200. It just depends on that educator. It depends on that person that you're looking at. But yeah, that just depends.
Okay.
That just depends.
Interesting. Okay. Good information.
Anybody got any questions on the indicators before we wrap this up?
Yes. Will the educators tell you which indicator to use, or is this something that we're looking to do ourselves?
Now, this is another thing that y'all need to write down. If y'all go to if y'all have the software, the strategies already, the add-ons, you can go up to the top of each indicator and see what the functions are. Now, if y'all don't have the add-ons, which is their actual thing, then you probably will have to look at some of their previous recording videos to catch them actually doing it. Okay. So that's just a little something that you're just gonna have to look in. But what I can do, because see, that's the thing, different educators have different functions. So I can't just tell you, hey, y'all, y'all need to change y'all to this. Because y'all might not like a certain educator. Y'all might rock with this person, And so that's just going to have to be whoever session you're on. If you go back to some of their previous recordings, you might be able to see it, or you might hear them say it. But if you have the strategies already, you can go on yourself and look. And then you can just put them on your screen on your own broker screen. And so that's what I like to do. I still take the trades of the softwares because they have something a little bit better than what my eyes can see. They have it in an algorithm that just pops up. But I do have my screen with some indicators on there and functions so that I can be able to see what they see. Now, this is what I want y'all to do too. And this is the last thing. Trading view. Okay. Trading view. If your broker do not have all of the indicators that you see that we have or somebody else has, tradingview.com is a platform that you can come to, and you can do free, or you can pay $15 and get a subscription, and you can come here and look at every indicator. There's a lot of indicators, stuff that you don't even know exists, stuff that half the stuff a lot of people don't even know. So many indicators, and you can have your favorites, right? See, these are some of the indicators that I use, and BI uses, and Dr. Rouse uses, and whoever your leader is, Chris uses. These are some of the ones that we use. But the ones that you guys I just went over is the ones that you really need for sure. But at the same time, when you start looking in TradingView, you started to see, oh, I can use this indicator. Let me see if my broker got it. Oh, my broker got this. Well, let me put that on there. Let's see what this indicator does. And this is where we mark up our charts to kind of see what the overall trend of stuff is going to be as well. So those charts that you see BI putting in the chat, this is what he does. He goes to TradingView, he marks it up, he looks at it, he gives it an overall analysis, and then he can kind of tell you on the direction of where the next move is going to be. Okay. And so if your broker doesn't have all the indicators that you want or that you're looking at, you can always go to TradingView and play around into the market, because one thing about it, TradingView does not manipulate. TradingView doesn't have a certain price and then another one has this price. It has one straight thing. Okay. And then you can also do a lot of research, because your broker might not let you go back in time on the screen when you're looking at the chart. But you see the year down here, 1 year. But TradingView allows you to go way back, see, in time. And so when I tell you guys, this is how the educators analyze. Look at that. They go all the way back. And then they say this. They say, so this was the previous high here. So let's go to 2020. Let's see what's going on this. Oh, it hadn't went back up to that previous high. Let's see. Uh-oh, we almost close. So if it breaks that ceiling, if it breaks the ceiling up here, okay, this is what they do. They say, okay, so that was the previous high in 2018. But we hadn't went there since. Well, that was the previous high in 2018. We almost here. So because it's in no man's land, it's what? Close to this what? Ceiling. So then they say, so if it gets to here and it doesn't break, then we know what? If it gets to here, it's going to go down. So say if this happens and this gets to this here, this is 2021 now. Well, it ain't been this high all 2020, first of all, or 2019. And now if we get to that point, we all the way back in 2017. So they would look at it and say, oh, this one we need to watch for a big move. Okay. And then they would say, if it don't break this once it get here, then what? It's going to be a big drop. Now, even though it looked like it's a small line, that's thousands of pips. That's thousands of dollars, hundreds of thousands of dollars down. And so that's why when you see them and say, all right, guys, let's look at so-and-so, so-and-so. They already analyze these things. They just come on there and they tell you what they've already analyzed. But it's not hard to analyze yourself. You're just going back in time to see what's about to happen in the future. That's all. Okay? I know I was on here for like an hour and a half. My bad, y'all. But I just wanted to show you guys.
All good. Love the game. Keep going.
All good.
I just wanted to show you guys what they see and what they're looking for when they're in the market, so that when you're in there, you can clearly see the same thing, and you won't be like, I don't know what they're looking at. I don't know what they're talking about. I don't know what an engulfing candle is. I don't know what a doji is. I don't know nothing about no support, resistance. I don't know no low. I don't know no zone. Now you do. Yeah, you do. So now when you hear them say in the zone, guys, or if you say, well, it's at a level of support or resistance, then you already know what they're saying. Right? And so you will know it for yourself. When you start looking at your own broker and you see that, you're like, oh, you looking real sexy. You looking real good. Let me check you out. Because you look like you're trying to talk to me. You look like you're trying to tell me something. And I'm listening. I'm going to oblige you, pair. And I'm going to see what you're saying. Because, see, you might be trying, holler at me. And I'm, listening to what you got to say. You looking real good. So, yeah. So, hopefully